Great chances, big fears are ruling the stock market currently. The global stock market had a strong movement to the downside. Wherever you're looking, Eastern, Western Hemisphere, wherever you're looking, the market is coming down or came down strongly, but now it's recovering a little bit. Is this giving us a new chance for an entry, or is the fear bigger that the market is turning around in the wake of all the central banks' action we can expect now with interest rates to be hiked in the near future? So let's have a closer look what the chart is telling us, what the market participants are doing, and what we can deduct from all their actions. So let's start with the Dow Jones. In this case, it's the Dow Jones Future. You can see the March contract here. YM is the symbol name in this case, but this is representing the Dow Jones. And you can see that we have seen the strong movement to the downside and the recovery. And this is the good news. Recovery always sounds nice. So can we buy now blindly and expect that the market will continue to the upper side? I doubt it, to be honest. Why? Haven't you been bullish when reaching this market level here, the green area here? Yes, I am still bullish, and I am continuing to be bullish, because as long as we are staying in this level or turning around above this, the situation seemed to be good for a continuation to the upside. Roughly, maybe above the 40,000 level, 40,400, 44,000. I'm sorry, 44,000, for example, might be a good target for this movement. So shouldn't we buy? I know many people are driven from FOMO, the fear of missing out. They don't want to miss the next opportunity. Oh, I missed so many good entry points here. I should buy here. I should have bought here. And yeah, typically that's absolutely correct. But is now the perfect time for buying? Depends, of course, on your time scale. If you want to be on the buying side and expecting something like this, you want to keep the positions for a long time, for many weeks, months, or maybe even years, but at least until the end of the year, expecting that the market will go up, then it might be a good opportunity to buy, as long as the market is staying here. So this is also giving us a good indication where we should stop the position. This is something many market participants are not taking care of. They say, no, you told me to buy. Well, I don't tell anybody something, but I would strongly recommend, if you think the market is in a buy side and you are disappointed because the market is turning, close your position, because the market is not moving like planned. So in this case, I think we have a great stop level, roughly around 32,000, maybe a little bit lower, and latest below the August highs in 2020, which are roughly around 29,000. As long as the market is staying above these levels, everything seems to be okay for the bull market, even when we have to expect some lower levels like in the last few days. Okay, so what should I do? So I would prefer, to be honest, I would prefer that the market is going down once more. The market is doing this in the first part, or did this in the first part. It may do this in the second part. Maybe it's not so low like I've drawn it here, but we are still here in the green area. If it's a little bit shorter than the first part, and you can see I was drawing this a little bit too long, I can do this a little bit more professional wise, like this, the first part. This is the highest level currently, and we can expect here is a 100% level here, which is roughly 31,700. It's a little bit below these 32,000, and it's not 100% sure that this is necessarily the same size, but roughly around these levels. So you could expect that if the market is turning to the lower end, we should expect something like this to happen. I would wish for this, not to bother you. It's more like if we have something like this and the market is overshooting this level again, then we have this as a risk side, but expecting, let's say, 10,000 to the upside. So this is giving us a better idea for the bull market if the market is pushing here. I would wish for this because this would give us a typical picture here, the wave patterns. However, is there a chance that the market is moving strongly now? Well, if we have a closer look, you can see this horizontal line here, and you can see currently we have more or less a non-overlapping situation, so it is still okay. But if the new week is giving us levels below this level here, then I would definitely say this is a corrective pattern, and I'm not super bullish. The lower this gets, the worse it gets for the bull market. So breaking through these levels here is a really bad indication for the bull market, and is more or less telling us that this is a counter movement and we will get something like this. As long as the market is staying above these levels, I would not say short is the best situation, because currently is still an opportunity that the market is first overshooting here. And in this case, let's tidy up a little bit. In this case, it would look like more or less something like this, which has a shape of a bull market pattern with just a little bit of overlapping, just a few points. Also the same with the index, the Dow Jones index, also the future only had a little bit of overlapping here. So if then the market is coming down in an ABC pattern, I would definitely look for long opportunities and enter the market here. You could see from that in my eyes currently it's not the best choice to enter the market in either direction. If you are a buyer and if you wish to be on the bull side, I would say it is wise to wait for this setback here and enter the market then. Unfortunately, we don't know exactly how far this movement will be. It can be that this will last a little bit longer, so that the market is moving above this level, which would be really typical, because then all of these unexperienced traders are saying, no, I missed again. Okay, I will enter the market now because I don't want to miss the opportunity. And I'm quite sure the market will will turn around and will reach this area here in the middle again. So we will have another opportunity and can do with your money something different in between, because it will take many days or few weeks even. So you can see that I'm not super convinced that this is a perfect buying side time in this case to expect that the market will continue in one movement. It can happen, then it's a missed opportunity, but I prefer missing opportunities instead of paying expensive mistakes. So in this case I will, it's not a would, it's a will. I will definitely wait for some setbacks which are indicating this movement is weaker, and I can wait for the intermediate break here of these levels. We have a quite similar, a little bit different situation here with the Russell 2000. I definitely want to show you, because this is indicating the broad market. 2000 stocks are included, the E-mini Russell future, in this case the March contract. And you can see something what I really, really like to see, which is some really nice price pattern. It looks like a 1, 2, 3, 4, 5 to the upside. And this is indicating this is a strong movement. Is this an ABC pattern? Well, yes, even when looking at the 15-minute charts, what I more or less constantly recommend to have a closer look on the lower time frames as well. You can see this looks really, really corrective. It seems to be a 3-wave pattern, and if not a 3-wave pattern, you can see we have so many overlappings, and now this again. So whatever it is, even if it's coming down once more, this always looks like a corrective pattern compared to this upside movement anyway. So I would think that this movement has a really, really good chance for the upside currently. Well, indeed, it looks like this. There's a small danger in this, that this is only the last wave of a flat corrective pattern. Let's have a closer look. What are flats? Flats are looking like this. This is a flat corrective pattern, ABC. And you see the last wave of an ABC pattern is a 5-wave move. 1, 2, 3, 4, 5. So this might be exactly this one. 1, 2, 3, 4, 5. But to confirm this is a flat, we can have a look what is before that. Before that, we need something like an ABC to the upside, an ABC to the downside. ABC to the upside, ABC to the downside, and then this 5-wave pattern. And if you have a closer look, oh, yeah, that's not perfect, because it can be something like an ABC flat correction. In this case, inside a down movement, which would lead to a continuation to the downside. So I think it's really crucial to wait for a confirmation, which might be the intermediate high I've mentioned here before. This may give us a better chance. So as long as the market is staying below this level, I definitely would never buy this market, because the chances for this pattern as an outcome here are very, very big, because this can easily be a flat corrective pattern, which is looking like this. You can see this is lower than the start of the pattern. You can see this is lower than this start of the pattern. This can regularly happen. So it definitely can be a flat. So what I definitely need to see is some breaking through this level, or what I even prefer is a strong move to the upside and a really corrective pattern to the downside, so that the pattern then has a chance to do exactly the same like we've seen here before. Strong movement, weak movement, strong movement, weak movement on a lower time frame, so that we can enter here, but our targets can still be like this. So we still, in the broad stock market, we still have a chance that the market is on the bull side currently for the next few days, even for maybe for a longer time period, because this pattern, also something like a sidewave correction, may have an end now at this point and may continue to the upside. But the decision may be more clarified on a lower time frame. That's the reason why I always recommend, whatever time you're trading, if you say, yeah, I only want to have a closer look one time a week, maybe on Wednesdays or Fridays or Sundays, whenever you like, then you can say, okay, on a lower time frame, I can read more from the internal structure than in a weekly chart, for example. So even in this case, I strongly recommend to have a closer look here to see whether this pattern unfolds like this, or is unreadable because too many overlappings in both directions. So in case the market is doing like this, I would stay with the long side, breaking through this level or breaking through this level here, which is the 3rd of February in the morning in US time, or afternoon European time, or evening Eastern, Far East time, let's say it like this. So these intermediate high may be some kind of a trigger for the bullish market here in this case. But as long as the market is not doing like this, doing much more continuation to the downside, then I would say this level is not holding anymore. And so we should expect some lower prices here as well. You can see that the market is not decided now where to go. In all markets, the same should be with the mini S&P 500. This is the future on the S&P 500 index, also the March contract. And you can see, similar to the Dow Jones, we have seen some overlapping here. In this case, other than the Russell, it does not look like a 5-wave pattern. It looks like a maybe 4th wave currently. Maybe this will happen as long as the market is staying here. Shaky to the downside will lead us to continuation to the upside. But this is really, really crucial to see this 5-wave pattern. No continuation to the downside, because underlapping, it's called overlapping, of course, but going beneath this level here from the end of January, which would indicate, oh, this is a corrective pattern in this case, because when the market is going a little bit lower here, then we have overlapping situation. This is corrective, and we should expect some more to the downside, which is not untypical here in the market, because you can see even the 38.2 level here in a weekly chart still has a lot of room. So even when the market is going into this direction, this is not killing any bullish mood, because a typical setback normally is going into this direction anyway. So I would expect something like this at any time, but on a lower time frame, as long as this market is staying up above these levels, doing something like this, and then an ABC pattern, you have a really nice continuation chance to the upside. So what is the Nasdaq doing? The Nasdaq with the technology stocks inside, this is the future NQ is the 100 Nasdaq 100 future on the March contract in this case, and you can see here we had some overlapping. This is way lower than this one or this one. So definitely what we've seen here, this is definitely an up move, yes, but it looks very, very corrective because the market is here in a really, really shaky shape. So if this is a corrective pattern, then the continuation to the downside needs to unfold in the near future, not necessarily directly. It can move a little bit higher first and then, but more or less this is sure that this is corrective and the market is continuing to the lower end. And also for here, 13,000, which is level marking the Fibonacci level at 38.2, is something really, really typical. And even if the market is doing something like this here, it is not killing the bullish mood here. From that level, we can later may buy on. Here, the decision will be made whether the market will turn or fall. Not now. So if you want to trade on a lower time frame, you should have an eye what the market is doing. The last movement here seems to be quite strong, and the upper movement here is with a lot of overlapping. So I'm not really happy to buy these markets now. I would wait a little bit longer or wait for short selling entry points in this case. Let's have a closer look to the Asian market, especially the Nikkei 225. This market seems to be in a really good shape currently because the last movement we've seen here and this part here, this part is way weaker than this one. I would hope for another movement down here. Why? Because if the market is coming down once more, we will reach the typical turning levels, which are 38.3, 61.8 roughly here, which is namely 27,000, 26,600, roughly in this area here. And if the market is doing something like this, it would be so lovely to buy the market to at least expect something like this. You can see this is a short-term notice. This is not indicating necessarily that the market will rush on the big price scale. However, if you can enter the market here on these levels, you can maybe take profit here. If you're a short-term trader, you can take some profits here at these levels, or you can easily trail your stop to your entry level and say, maybe I have a chance that the market is now in a bullish mood here and continuing to the upside. To be honest, currently it's a little bit betting against the US market. And we are still in a non-confirmed breakout from this corrective pattern here. This is really a corrective pattern. So I'm bullish on a big scale here. You can see the weekly chart, but I'm not sure this is breaking or giving us a chance to break out of this level. No, this is it's a chance, but it's not more. So if you are a little bit suspicious about this situation and the relation with the US stock market, I would not recommend to stick here and trust this. There's no chance that the market will turn. It will definitely rise to new levels here. But this is a good chance on a lower time frame. Anyway, you can trade this. What is the German market doing? The German market is doing completely the opposite. The market came down. This is the DAX index, the same with the future, of course. You can see here that the market came down from this typical corrective or the typical end of a corrective pattern. We had a cluster here from many levels, also the typical, let's say, trend channel here. And you can see that the market is now just broke through this level here, which is now more or less indicating that we are still on a downtrend. I would not recommend to sell short at that level because the market came down strongly here already. What I would expect is that the market will recover at least a little bit, and as long as this is in a corrective manner, if this is an ABC pattern or something shaky, then I would expect that the market will continue to the downside, reaching this area, the final area we were talking about several times before, which is roughly between 14,800 and 14,200 roughly. Only breaking through these levels here is killing definitely the bullish mood. As long as the market is reaching there, I would still say, okay, that's and that's, it's roughly the same. It's a sideways correction here. This was a sharp correction maybe here. So from that levels here, we have a good chance. So here we can expect the decision roughly here, whether we have a bull market or not. From the current picture, I would not trust that the market will not reach this area here. Not necessarily exactly the green line. It can be somewhere in between these levels here. So it is more or less within these levels I've named before. This is the target area for my movement here to the downside, and then we will see the decision whether the market will turn around or not. So all of this is indicating that the market is not in the perfect situation to turn around to the bullish side currently, but we are still in an overall bullish mood. So don't give up if you're a bull market rider. If you want to ride the bullish wave here, you have to keep your positions until below these levels, or the levels. Also, I've named them in the US market as well, because this is a typical extension of the corrective pattern we've seen here. But below this level, the market will turn into a bearish market. Currently, it is just a part-time bear we can expect here. This is not a really dangerous situation currently. It is just in the early state of a bear market or in a late state of the corrective pattern we can expect here. And here the decision is made where we can expect more or less. So please be advised that the market has a good chance to continue the down movement. Don't get afraid if you want to keep the positions. It is still okay. But I don't want to recommend, close your eyes, keep your positions. If you don't want to accept that the decision will be made here, you should think about closing your position as soon as the market is breaking here through these levels. Or what I do normally is opening a short position, so sell short the market to take profits at a lower price level when the market is coming down. So I hope this is helping you for your own trading decision. It's a little bit an awkward situation because it's not a clear picture like this is the entry point. No, that's not the case in these days, but we saw some good indication where we can have the next decision making process in giving us an idea to enter the market on the long side or on the shorting side or the short side. So I hope this is helping you. Crossing my fingers for your own trading success. Still healthy. Seeing you soon. Bye bye.